presentation today on relocating to the US as an Australian citizen. My name is John Versace. I'm the head of Expat Services and a senior financial advisor here at Up 12 Partners. I've got a specialty in assisting US Australians with their financial planning. Lucky enough to be joined today by Brad Murphy from Murphy Tax Lawyers, who's a specialist international tax accountant and lawyer. Welcome, Brad. How you doing?
Yeah, good. Thanks, John. Yeah, great to be part of the webinar today. Nice to see everyone.
Great to have you, Brad. And we've got Jantel Camisa-Markel from Camisa-Markel Immigration Lawyers based in New York. So Jantel is an immigration specialist to the US and specializes in helping Aussies get across to the US. Welcome, Jantel.
Thank you, John. Thank you, Brad. It's nice to be here.
What time is it your time, Jantel? Is it
30? Not too bad. Yeah, it's still
good,
light outside. Summer here now.
Thanks for joining us so late in the evening. It's we're really excited to present this webinar to you all. We've got a jam-packed session, so I won't keep you too long at the start. Just a bit of housekeeping to say that this webinar is recorded. So anyone that needs to take off early or can't stay for the full session, we are recording it. You'll get a copy within the next week, typically. So and also we'll endeavour to get through as much content as we can today. But if you've got any questions, you'll see a Q&A box at the bottom of your screen. Please feel free to ask any questions along the way. We'll try and get to as many of those at the end of the session as we possibly can. If we can't get to anything, we will come back to you in via email within the coming days. Just getting through some of the formalities. So just to point out that today's session is general in nature. We obviously haven't considered any of your personal circumstances. This isn't a replacement of receiving personalised advice. If you do want to receive personalised advice, please reach out to any of the panelists today or a suitably qualified professional. So without further ado, really, there are going to be some really important financial considerations of moving across to the US. Brad and I will go through those a little bit later on, but really, first and foremost, you really need to have the right to reside in the US and the right to work in the US. So we're really lucky to have Jantel here today to talk us through those matters and how you can actually get across to the US and have the right to reside. So throwing over to you, Jantel.
Thanks, John. All right, so just a little bit about me. I'm originally from Adelaide, hence the Australian accent, even though I have now lived in the US for 24 years, come January. Before that, I lived for a little bit in London in 99 and in Rome, Italy for a little bit before that. So I left Australia in 1998. But I still have retained my Australian accent because I have lots of Aussies that work with me in my office, and I speak to Australians every single day, multiple, work on this. That's why this is not that late for me, because I work on this time zone a lot to speak to clients that are coming to the US. Either they're individuals that have got a job offer and they're moving over, or they're companies that want to expand into the US. So we help them with that. So that's a bit about my background. We do all nationalities, so not only Australians. So if you're a company and you've got other people that work there that are a different nationality, we can help them too. But yes, because I think of my background and because there is a visa that is specifically just for Australians called the E3, and we're going to talk about that. Our firm has become very well known to be the leaders in that specific visa type as well, and the things that you can achieve and do with it. Okay, well, I'm going to dive right in because I tried to squeeze in lots of content for everyone. And like you said, John, this is not a consultation, shouldn't be taken as legal advice. If you do need legal advice, happy to look at your individual circumstances and happy to answer some questions at the end too. Put them in the chat box and we'll try and get to them depending on timing. So here we go. So the first things I ask people when they are looking to move to the US, and the first things we look at are, why do you want to be in the US, right? The general reasons are, okay, you want to live and work. You've always wanted to live and work in the US. It's something that you've always wanted to do. How do I do that? or it's, I want to expand my business into the US, or you might not even have a business that in Australia that you want to expand to the US, but you have this great business idea that you want to launch in the US. In fact, I was on a consult with some clients yesterday who are going to launch a drink business in the US. They're Australian. They're kind of developing the concept, but they're not going to launch it in Australia. They're going to start that directly in the US. I'm going to use them as an example actually throughout. Some people call us, they want to move to the US because they've met an American in Australia that's, living there, and they want to now move back to the US. Actually, there was a tech company in my office this morning where the spouse was American, husband's Australian. They've been living in Australia for 7 years. She just got her Australian citizenship, actually. She's the American citizen. And now they want to expand their business into the US. So maybe you want to come over to be with your American girlfriend, spouse, or you've got a girlfriend or spouse that, or boyfriend, but significant other. I shouldn't say girlfriend. So you have a significant other or a spouse that might have got a job offer in the US, and you want to be able to come too. So sometimes we have that situation. Then we have the people that are just at the point that they're retired, and that can happen at any age now, as we know, can be very young, that they just want to come and be able to spend significant time in the US. They want to buy a place in Miami and hang out, or in Vegas or in New York or anywhere, and just hang out. So how do you achieve that? Then what we're going to also cover is what if you eventually, you've got this plan, you want to move here, but you also do want to try and get a green card or US citizenship. So we'll talk a little bit through how do you get a green card and citizenship too. So the first questions I typically ask are, well, because this will determine which visas we go for as well. How soon do you want to be in the US? Do you want to be here as soon as possible? Like some visas, the E3, typically we can get someone here within a month or even less. Or do you want to, is 3 to 6 months okay? Because some of the other visas like an L or an E2 or even an O1, those can take up to 3 to 6 months to get. Or maybe you're like, yeah, we're forward planning we're thinking we'll enter next year. And if you're the spouse of a US citizen, say, you can do the process from outside of the US, from Australia, but it takes about a year. But if you wanted to be here before then we would, pursue a different path first rather than the green card from Australia. Okay, so let's go to the first. So that was kind of like, an outline of what we're going to cover. So first up, you're the person that says, it's just been my dream to live and work in the US. I've always wanted to live there. How do I do this? How do you make it happen? So unless you have a green card already, or you're a citizen parents and you're able to come because you're a green card holder or a citizen, then typically you need to start with a non-immigrant visa to come to the US. Because the green card process itself takes too long. So you're not going to wait to get a green card. Even if you win the green card lottery, actually, it takes about a year to a year and a half before you actually get that green card to be able to come to the US. And sometimes people are wanting to come before that. So if you do want to come relatively quickly, within less than a year, then you would need a non-immigrant visa. And pretty much almost all non-immigrant visas are sponsored by an employer. So and you need a job offer. So how do you get a job offer? And how could you come if you don't have a job offer, and then try to look for one? So you could, yes, absolutely, job hunt from Australia. And if you get a job offer in the US from Australia, we can process the visa. Like I said, if you qualify for the E3, which pretty much we can almost make anyone qualify for an E3, as long as you either have a degree or you're old enough to have 12 years of work experience. And we're going to go through that a little bit. But like I said, we can get that pretty much within 3 to 4 weeks for people usually. But I think it's easier when I speak to people that are wanting to come here and get find a job that's going to sponsor them. I do recommend that it is easier to job hunt from on the ground in the US. So then people are like, okay, well, how do I do that? You can come in on the ESTA, which is the visa waiver. So Australians can come to the US. Most of you are probably aware of this already, but you can come into the US just by paying a $21 fee online to get what's called ESTA. That allows you to come without a visa to the US for up to 90 days at a time. And in that period, you can then look for a job, and hopefully, you'll be here, you can attend interviews, you can network, you can meet people, and hopefully secure a job in that time frame. If you don't, you'd have to leave the US and then return to get a new 90-day period. So while looking for a job is a legitimate activity in ESTA status, I typically say to people, don't say that to the immigration officer when you're entering the US. Don't say, hey, yeah, here I am. And they say, why are you coming to the US right now? What's your intentions in the US? Oh yeah, I'm going to come look for a job. The immigration officer will think that you're coming to look for a job and stay here and work on ESTA, and you're not allowed to work on ESTA. So even if you say, I'm going to look for a job, and then I'm going to go, and then I'm going to get the bright visa for the job, and then I'm going to come back, just don't go down that road. Just, I'm coming as a tourist. And then while you're here as a tourist, if you do decide to look for a job and do job interviews, that's completely legitimate and legal activity. There is the option of a B2 visa. That's an extended tourist visa. And the activities that you're allowed to do on the B2 are the same as on visa waiver. So you can job hunt on it. It will give you up to 6 months at a time in the US. So people are like, oh, that's awesome. I'm going to apply for a B2. That'll give me 6 months to look for a job. The issue there is that when you go to apply for a B, that one you'd have to apply for it at the consulate. And when you go to apply for it, the consulate officer is going to say, okay, why are you applying for a B2 when you could go to America with the ESTA? It's because you want to stay more than 3 months. What do you want to be doing there for more than 3 months? Do you have sufficient funds to cover yourself for up to 6 months without working as a tourist? Do you have home ties? Are you going to come back? So the B2 tourist visa can be tricky to apply for, because if they think you're going to want to stay in the US indefinitely, they could deny it. And if they deny that visa application, then you can't even use ESTA anymore. So then you're kind of screwed, and then your only option is to try and find a job from Australia before coming over. So I usually recommend people to just come over on the visa waiver at first, look for the job that way. Okay, so there is a visa, one visa that does not require you to have a job attached to it first, and that's the J1 summer work travel visa. I'm not sure how many of our attendees would qualify for this, but I'm going to mention it anyway, just in case we have some young viewers. Or you don't even have to be young. You just have to be someone who is at university and you've completed at least 1 year of university abroad. So it could be in Australia, or you could be at a university somewhere else outside of the United States, have completed at least 1 semester. Then you can actually defer your studies and come to the US for up to 12 months. Or you have to be within 12 months of having graduated. And then you can come in, and you don't have to have employer attached. That being said, when you come to the US, the program is intended for working and traveling. So the jobs that you're allowed to do on this summer work travel job are more non-professional jobs, such as working in a bar, working in retail, administrative assistant type jobs. The way that sometimes people use this, if you qualify, like if you've just finished uni, or you've been studying and you finished at least 1 semester, and senior TAFE courses that are advanced also qualify for this, by the way. The way that some people use it is that they'll use it to be able to get into the US, and they can be here for longer than the 90 days on ESTA, because it's a 12-month visa, to try to look for work. And then if they look for a job that's not one of those ones that you can do on this visa, such as retail or administrative assistant or receptionist, these sorts of things, then you get your foot in the door, you get the job, and then you can then switch to an E3 visa or another visa. And the beauty of the E3 visa is that you can get it at a consulate nearby the US. You wouldn't have to fly back to Australia to get it and come back. So it's a little bit of a little strategy of how you can sort of extend that time of job hunting if you qualify for that visa. All right. Oh my gosh, it's not letting me. Go to the next slide. There we go. All right. So what are these visas that I'm talking about? You've got a job. If you've got a job offer now, then what visas are you going to get? This is my big Bernedoodle dog barking in the background. Sorry if you can hear him. So the first visa that most Australians are going to qualify for, and that is fabulous for Australians, is the E3 visa for Australians. It is a visa that lasts 2-year increments at a time, and you will be able to renew it indefinitely, which is awesome. The requirements of it are that you have to have a degree or the equivalent of a degree. And the equivalent of a degree can be obtained just through work experience alone. USCIS says that 3 years of work experience equals 1 year of university studies. So therefore, if you had 0 university studies at all, and sometimes TAFE courses can count as university studies, but if you have 0 post-high school studies, but you have 12 years of work experience, you'd have the equivalent of a US bachelor's degree. If you completed at least 2 years of your university, but then you didn't finish, then you only would need to add 6 years of work experience to that to have the equivalent of a degree. So the other day I was on a consult, and the person had not, before we do a consultation, we ask for the person's resume, all their academic transcripts, all of their passport bio pages and so forth. And so a lot of people that never finish their degrees don't put it on their resume because they're like, oh, I never finished it. And don't send it to us because, oh, I never finished it. But we'll often ask, like, did you do any studies after high school? So the other day we had a guy who's like, oh yeah, actually I did 2 years of marketing and business, but I didn't put it on, blah, 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 blah. And I'm like, oh, aren't you so happy that those 2 years now count for something? Because your whole life, you're like, oh, I wasted, I didn't never finished. But so if you're coming to the US, any university studies can be really valuable, even if you didn't finish. So if you have a consultation with an attorney, always disclose any studies that you've done. So not only do you have to have the degree or the equivalent, the job needs to require the degree. And that we can, by the way, we can make almost any job require a degree. So for example, a bar manager often could require a degree in hospitality management. And so that's for the lawyer to be able to argue your case that the job you're going to be doing requires a degree. And typically a good lawyer will be able to figure that out for you. The employment can be full-time or part-time. So also if you're, it's just good to know, right? Because sometimes you might have an employer that doesn't want to give you a full-time job, but know that you can get it with a part-time job. So what other visas are available? Say you're working for a company in Australia, or you have a business that you want to expand to the US, there is an L1 visa that's for multinational managers and executives. You have to have worked for the company in Australia. Wait, I'm just going to assume everyone's in Australia at this point, but for the company abroad, so let's just say Australia, for at least 1 full year in a managerial or executive capacity, or in a specialized knowledge capacity. And it has to be 1 full year. So if in any of that time you've spent time in the US, you have to add that to the year. So say you spent in the last year 3 months in the US, you wouldn't qualify for it until 1 year and 3 months. But this visa, you can then transfer, and you have to show that you're going to be a manager and executive in the US. The corporate relationship needs to exist between the two entities, and it's a good visa. However, it's quite expensive visa. There are fees to USCIS, and it takes quite a while. It can take up to 2 to 3 months to obtain it, because you need to go through a process with USCIS first and then go to the consulate and apply for the visa. Whereas the E3, you can just go straight to the consulate and apply for the visa. So a lot of the time we will have clients that qualify for both, or even maybe 3 categories of visas, but we'll pick the one that we'll try to, why not pick the one that's cheapest, fastest, and serves, the same purpose. So sometimes, even though you might qualify for an L1, we might go for the E3 anyway. Also, because if the office in the US is less than 1 year old, you will only get 1 year on that L1, and you're paying 3 times the amount that you would have an E3 to just come for 1 year and then have to renew it. So typically we'll say, okay, in that instance, you may as well come on the 2-year E3 and then switch to an L if you want to. When do Australians typically switch to an L if they qualify because they're working for a related entity? Usually it's if they're trying to pursue a green card, because there is a green card category that's similar to the L1 manager and executive category. And there's a benefit of being on an L to the green card, because you have no interruption in your ability to travel internationally when pursuing the green card. Okay, so there's an E1 and E2, treaty trader and investor visa. This is for people that have invested a ton of money in their business in the US. It's a bit of a chicken and the egg visa, because you have to have spent all the money in the business in the US before you can get the visa, and the money has to be at risk. So actually this drink company I was talking about before, they were a prime candidate for the E2, because they've already spent money on can production, warehousing, marketing, all these things in the US. They've spent about 160 grand so far. So, and the business is more than 50% Australian owned. They really do qualify for this E2, and it would be perfect, except they also qualify for the E3. And the E2 has this additional fee now, as of a couple of years ago, that you have to pay at the consulate when you get approved the visa, and it's $3,574 per person. So these people starting the drink company, there were 2 partners, and they each had 3 kids and a spouse. So now that was going to be like 18 grand that they'd have to pay at the consulate just to get the visa issued, whereas they don't have to pay anything to get the visa issued for an E3, and the legal fees for an E3 are a third of the cost. So they qualify for both, but we're going to do the E3, because why would they spend all this money when they don't need to, right? So H1B, I'm not going to spend too much time on that. It's almost exactly the same as the E3, but it's for people but if you're not Australian, you have to go for an H1B. Some Australians might, once they're in the US, switch to an H1B at some point if they want to pursue a green card, and mainly, again, if they've got that international travel piece that they really need to do. Because when you're pursuing the green card from within the US, there's a short period that you can't travel internationally. There's an I visa for foreign media. That's so if you're a journalist or a photojournalist, you could potentially come on that. There's an O1 visa, and that's for people who are extraordinary at their work. So they've won awards, they've got press, they're really at the top of their field. There is a visa for that. Again, that one takes a lot of time. It's costly. So often if someone qualifies for an E3 and an O1, we'll pick the E3 over the O1 just because it's cheaper, faster. The people that would do an O1 are ones that really can't qualify for an E3. So let's just say you're a stylist, a hairdresser, a makeup artist, right? You don't need a bachelor's degree. It's really tough to argue that you need a bachelor's degree as a makeup artist. But say you're a makeup artist, but you have your own business and you've been running a makeup artistry business with employees, then we could qualify you for an E3. So it's just about how creative you get with what it is that you want to be doing in the US and your background experience and so forth. There is the J1. We mentioned the J1 before. That was a summer work travel J1. There is also a trainee J1. So if you don't qualify for, typically we'll use this for Australians that don't qualify for an E3 because they're too young. So let's say you're 24 and you don't have a degree at all. You have no studies after high school. Then you don't have, it's going to be impossible to show that you've got 12 years of relevant work experience, because then you would have had to start working full-time from the age of 12, and the consulate's not really going to buy that. But the qualifications to get a J1 trainee visa is that you just need to have either a degree plus 1 year of work experience or 5 years of work experience in your field. So if you're 24 and you don't have a degree, you won't qualify for the E3, but chances are you probably will qualify for this trainee J1 visa, because you probably worked from the age of 19 to 24. So that's your 5 years right there. And we can bring you over on that. And the summer work travel J1 I already spoke about. Okay. So if you want to expand your business in the US, I've kind of gone over the visa categories that exist. So then it's a matter of like, even the founders of expanding a business need to fit into one of those. So we spoke about the L, right? Either you're going to come over on an E3 as a founder, or an L coming over as transferring as a manager or an executive, or on the E2 as an investor in the US business. What do we normally ask? I'm trying to just watch the time too and be respectful to Brad and John. I don't have too much longer to go, but if you're expanding the questions that I'll typically ask are, how long has the Australian business been in operation? Like, has it been at least a year? Otherwise, we can't qualify for the L1. How many employees does it have? Because for the L1, you need to have employees in Australia that are going to keep on working in Australia, and that business is going to continue running even when you expand to the US. So are you looking to bring over who are you looking to bring over? Is it an existing employee or is it not an existing employee? What will the ownership structure? Sometimes it's the Australian business has a different ownership to the US business, and then an L wouldn't work. Then the same with either E2. What's the nationality of the business? The business needs to be at least 50% owned by Australians to be able to even get the E2. So if you're starting a business in the US, it's going to have a bunch of investors and you end up owning 40%, and then it's a whole lot of US investors or other nationalities that own the other 60%, then an E2 is not even an option. So we ask all these questions to really determine which visa category is going to be best, even for founders. All right, so we've gone through like visas. What if you're the person that wants to come over with an American spouse? If you don't want to come for about another year to 2 years, we can start that green card process from you while you're in Australia. And then you would just enter the US with your green card. It is crazy, right? That if you're the spouse of a US citizen, it takes like 1 to 2 years to be able to get a green card to come. Whereas if you're getting a job, you can get it in 4 weeks. But sometimes what we'll do, if you want to come sooner, is we'll get people to either come in on as a visitor, and then they come for tourist reasons, they change their mind. They might then want to stay and pursue the green card from within the US, or they'll come over on a job first to get here sooner and then proceed to getting the green card from the US. Otherwise, if they've got time, then we'll do the green card from Australia. If you've got a green card holding spouse or partner, they can also sponsor you for a green card. Or if you're with a partner who is getting a visa through work, if you're married, then you can, so the US only recognizes spouses, actually, like you have to actually legally be married for the spouse to be able to get the dependent visa of the primary person getting the visa. And a lot of those visas allow the spouse to also work. So the E3 spouse can work, the L1 spouse can work, the E2 spouse can work. H and O spouses cannot work, but you're likely going to be coming over on one of those other categories where you can work as the spouse. If you're not married, there is a long tourist visa you can get as a dependent of a primary person coming over on their visa, but it does not let you work in the US. But you might use that to come over here and look for your own job and then get your own E3 if you're Australian. Where spouses usually will tend to get married so that the spouse can work is if the spouse themselves is not, the one that's not the primary one is not Australian, then getting married to the Australian will be easier for that person to then be able to work in the US. Yeah, so these are the considerations. I'm going to jump because these charts were really just to show that how long it's taking right now. If you're the spouse of a green card holder, it can take up to 3 years to get a green card. So we would, do a non-immigrant visa first, but I'm going to jump over that. So if you want to be with a non-immigrant, non-American partner spouse, I already did that. How great. We can jump through that slide. And I'll make these slides available to anyone who wants them, by the way, in case you're like, oh my God, wait, she just skipped that slide too quickly. All right, so now you don't even want to like work here. You just want to be able to come and hang out here. What are your options? So there is that B2 extended tourist visa. It will allow you to stay for up to 6 months at a time. To apply for that, if you just want to be hanging out here, you've really got to be able to show you've got significant funds in the bank account to support yourself without working. And you'll need to show home ties back to Australia. And the best way to show that is through owning property in Australia and or having other big home ties there, investments and so forth. You can stay up to 6 months at a time. You then just would need to either file an extension of stay to just remain, or you can leave and come back in and you get a new 6-month period. The other way you can stay indefinitely in the US without having to work is if you do get a green card. Once you have a green card, you can either work, not work. You don't have to renew your visa. You can just hang out. The other pros of a green card are that your dependent spouse and children, if your child's under the age of 21, when you get the green card, they'll get a green card with you. And if your child's over the age of 21, they won't. And it'll take about, once you get the green card, it could take you up to 7 years to sponsor a child after that. So we really highly encourage our clients with kids to think about that when their kids are younger. Also, while your dependent spouse can work on the dependent visa, children can't work. And I know you're all like, oh yeah, well, why is my kid going to work anyway? But kids can only stay on their parents' visa up until the age of 21. So what we see is a lot of clients whose children turn 16, 17, they're in high school, their friends are getting part-time jobs, they want a part-time job and they can't. So that's when we're seeing a lot of our clients say, okay, well, we need to get a green card. So if they get a green card, then the kid can work. We've had clients even who have young children that have been offered modeling jobs, acting jobs, and the kid can't take it on the dependent visa. So if you do have a child that's like in one of those industries, getting a green card is great because then your child would be able to work. Also, you need a green card to become a US citizen. So it is the path to citizenship. And if you're a US citizen, you can spend as much time in the US as you want and then leave and come back. And so that's good. The other ways of getting a green card other than through marriage is there's a bunch of employment-based ways. There's family-based green card we just went through, green card lottery. Then there is EB1 extraordinary ability. So people that are famous, that's the only category that can actually sponsor themselves for a green card. And then there's these other categories, multinational managers and executives. That was like that L1 I was talking to you about, advanced degree professionals. There's these other ones. It's actually taking, for all these other categories, it's taking about 2 to 3 years to get a green card. So that's why you need to come here first on a visa and then progress to a green card through your employer. And then when do you qualify for citizenship? You have to have if you got your green card through marriage, and you've got your green card, after 3 years of having your green card, you will qualify to apply for US citizenship. And this is the last slide, John, if you've got the green card any other way, after 5 years, you qualify for citizenship. And you just have to have taken no trips more than 180 days out of the US at one time. And I'm sure that has implications with your tax residency, which John and Bradley are going to talk about, because you need to have physical presence in the US for citizenship as well. So the pros and cons of citizenship and green cards are that there is, lots of pros. We've kind of gone over them. And the cons of citizenship is that you can't become the president if you're a naturalized citizen. You can be governor though, because Arnold Schwarzenegger was a governor. He was born in Austria, but no presidency. And you just need to check that you might not lose your citizenship from another country. So we have most countries, UK, France, Italy, you get to keep it all. I have 3 passports, Australian, Italian, and American. But if Japan and Germany, I know, are a bit funny about it. So if you have an additional Japanese passport or German passport, Korean, sometimes they can be funny about you getting your citizenship. You have to go through extra steps to keep your other passport. So they're just the words of warning. And the other big con is just worldwide taxes. And so this is my cue to hand it over to you two, Brad and John.
Beautiful. That was awesome, Chantal. Thank you so much for that. I mean, it just speaks to there's a lot of paths to be able to live and reside in the US, but picking the right one, can be a bit of a challenge, and having someone that understands, which path you should take is super important. So, you would have moved hundreds, if not thousands of Aussies across to the US, Chantal. So, you're an absolute expert in the area, and people would do really well to engage you to help them move across. Thank you very much for that. As Chantal, sorry, Chantal.
Yes. I was just going to say, don't try to figure it out on your own, right? Like it's a web. So the best way is to just have a professional figure it out for you and tell you, hey, this is what you're going to do, right? And then you go, okay, great, that's what I'm going to do.
It's too important to risk, isn't it? So getting the right people in your corner is super important. It often seems easier than it actually is with a lot of these things. And I guess that speaks with the financial side of things as well. It does become a lot more complex when you do move across to the US and having to juggle US and Australian finances. So Brad, Brad and I will talk through some of those considerations right now. Firstly, we're going to talk about ourselves very quickly. So we won't do that too long. So just to introduce ourselves. So I'm John Versace. I'm the head of Expat Services and a senior advisor here at Up12 Partners. Up12 Partners is a large firm. It's been around since the early 1990s. I lead a specialized team that looks after cross-border individuals, and it's predominantly US taxpayers. So either Aussies living over in the US, as many of you are looking to do on this call today, or US citizens living in Australia, because as Chantal mentioned, that the tax unfortunately follows you from the US. So there's some specific challenges that US citizens in Australia will have. The firm Up12 is a broader financial advice firm. So we look at really all aspects of your financial setup and planning your finances, really setting out a full financial strategy for your, to help you achieve your financial goals. And then we're there to make sure that you stay on track. And we're typically managing our clients' superannuation and investment portfolios, which we manage around about $2.5 billion on behalf of our clients as a firm, with the assistance of a specialised in-house investment team of analysts that we've got within the firm. So, and we are big believers in partnering with good quality firms, which is how we know Chantal and her team, and how we know Brad and his team. There's a lot of overlap with the tax planning, but Brad's the absolute expert in cross-border tax planning. So I'll throw over to Brad to explain a little bit about his experience and what he does for his clients.
Yeah, thanks, John, and thanks, Chantal, too, for that fantastic presentation. That was very insightful. Yeah, so I'm an international tax specialist. I'm a lawyer by trade, but do a lot of work, as John said, with US and Australian expats as it relates to international tax. So yeah, our firm is solely internationally tax focused, and yeah, the US Australian market's probably our biggest channel, and certainly our most complex channel too. So yeah, we look after tax returns for our expat clients, but also give advice as well.
Beautiful. Thanks for that, Brad.
Yeah.
So, in terms of moving, in terms of sorting out your finances, at the best of times it is complex. But when you move across to the US, it adds an extra layer of complexity. You've got often Australian taxes you need to worry about, and then going into a new world of US taxes and how they apply to your worldwide assets. So, how do you go about planning your financial future and determining what you should be doing with your finances to put yourself in the best position? So, really, the first place to start is always just to consider what your financial goals are and what you're wanting your future to look like. What age you're looking to retire, where are you looking to reside longer term? What are you hoping to achieve for you and your family? That'll give you clarity on exactly what moves you should be making with your financial setup to set you up in the best position to achieve your financial goals. So we'll go through that a little bit later on. Important consideration, which Brad's going to talk about in a second, is whether you'll be a US or Australian tax resident for tax purposes. There's considerations there on both sides. And, of course, then determining how you navigate both sets of taxes, US and Australia, with your financial decisions. A really important aspect is currency exchange risk. It's often neglected. There's rightfully a lot of focus on tax, but currency exchange risk is super, super important. Very complex currency exchange markets. So we'll very briefly touch on that a little bit later. And then from that, where do you build your assets? What assets do you build? Is actually going to be determined by those previous four points on the slide there. So we'll go through that a little bit later on. But firstly, the first thing you need to determine is your tax residency. Who's going to be taxing you and how they're going to be taxing you. So Brad, that's something Brad specializes in, and Brad will take us through that right now.
Yeah, thanks, John. Yeah, so I guess the first point would be, the nature of the American and Australian tax interaction makes it inherently complex on both sides, especially the American side. It's a very heavy reporting tax country. So I guess you want to make sure you really get that right, especially to make sure you're doing your your FBAR, for example, in the US, just to make sure you're reporting all your Australian assets over there in the US. So yeah, would recommend definitely working with a good US expat tax firm in terms of the move to the US. Before I jump into tax residency, I might just start too with some of the common issues and pitfalls we see, just to sort of summarize that, because obviously there's a lot we could speak about on this topic alone in terms of tax residency. But before we jump into that, just some of the pitfalls I see day to day in our practice would be, first off, selling an Australian property from the US. That's a really big issue. The main residence exemption, which obviously exempts the sale of an Australian home for Australian residents, is not available for non-residents of Australia. So if you sell that property from the US, unfortunately, we'll pay full capital gains tax on that. And there's also the US side to worry about as well. So you got two countries to think about. And the US, although it does have a primary residence exemption, does cap it in terms of its limit and the time period, which is different to the Australian period. So really think about that before you make the move over there. Secondly, in terms of your payroll structure, if you are working remotely from the US, employed by an Australian employer, that can be somewhat problematic from a more so a tax administration perspective, because the US would have the first right to tax that income. It's a case of getting that money back from the ATO, which can be time consuming. So make sure you get advice on your payroll structure, how you're employed, what legal entity you're employed out of before you make that move. Ideally, you make the move to a US employer, or think about another way of doing it through contracting or through umbrella companies in the US. Thirdly, this is a big topic, and John will go into this in a lot of detail. Australian superannuation contributions. Effectively, it's almost off the table for US tax residents putting money into Australian super, especially self-managed super funds or making non-concessional contributions like voluntary contributions to Australian super. Does create a lot of heartache in the US. So I'll let John run through that. 401k withdrawals as well, just how to best manage that if you do come back to Australia and withdraw that from Australia. Next one would be PFICs, or passive foreign investment companies. In terms of investing in Australian mutual funds or ETFs, can be also an issue on the US side, or starting an Australian company as well is also an issue to think about. The other one would be that the US states don't give a tax credit for Australian taxes paid. So although there's obviously a tax treaty that does alleviate double tax between the US and Australia at the federal level, which is great, unfortunately the states, in particular California and New York, do not give a tax credit for Australian taxes paid, which can be a big issue if you're looking to sell an Australian property, or you've got rental income coming in from Australia or an Australian business. It's something to think about in terms of what state you're going to reside in the US. And a good sort of segue from Chantel's last slide in terms of getting a green card or becoming a US citizen. I mean, you could talk for hours about that alone, but I think the key point would be just be aware, if you do get a green card or become a US citizen, you're tied into the American tax net for life, where you have the passport. If you do move back to Australia, you're still going to file your American taxes and report your Australian assets. So really important to get advice around that as well. But just quickly, before I throw it over to John, on the Australian tax residency point, the US side is relatively clear. You move to the US, you're basically always going to be US tax resident on the date you arrive, whereas Australia is a bit more grey and subjective given the nature of our test. But normally, if you move on the E3 visa for at least 2 years, you become non-resident of Australia at that point. A move of less than 2 years, if you're going for a year, for example, to test the water and come back to Australia, or you're just not sure how long you've been in America for, you're likely to remain an Australian tax resident. And that's when the tax treaty comes into play and says, look, what country gets taxing rights on the income? Normally, employment income is pretty clear. It's almost always taxable in the US, which makes it a good outcome, as long as you're working from the US and you rent out your Australian property or don't have accommodation back in Australia. That outcome's normally quite clear cut, but being a dual resident does create some other issues from the capital gains perspective. Okay.
Just on those points, Brad, we've got the table there, whether, if you are an Australian tax resident versus whether you're a non-resident, it does make a very big difference on how your assets are then taxed that are Australian domiciled. So, just going through those, essentially, if you're looking at the two big asset classes, being property or shares, firstly looking at if you're a resident for Australian tax purposes and looking at capital gains tax when you eventually sell the asset, the very big difference is that when you're a resident of Australia and you've owned the asset for more than 12 months, pretty well any asset in Australia, just using the example of shares or property, if you've owned the asset for more than 12 months, the ATO is only going to assess you on 50% of that gain. So let's say you have an Australian property or share portfolio, it's worth $1 million today and it goes up to $1.5 million in 5 years, and you're an Australian resident for the full time, the ATO will say you've made $500,000 of gain on that investment portfolio through the capital growth. We're only going to look at half of that though, and tax it at your personal tax rate. So because they're only looking at half of it, the total tax you would pay on that full gain is 23.5%. That's the maximum that Gina Reinhart would pay, the richest person in Australia. She's only going to pay 23.5% on the total gain, because it's half of the top marginal tax rate, which is 47%. It's very different though if you're a non-resident. So if you own an Australian investment property as a non-resident, you're taxed at expat tax rates, in which you don't have a tax-free threshold. The first dollar of Australian assessable earnings that you earn, you're paying tax at 32.5%, and it goes up to 45%. However, you don't get 50% off that gain. So in that example that we were mentioning before, you buy an Australian investment property for $1 million. It goes up to $1.5 million. You don't get that 50% discount on the capital gain. The ATO will say you've made $500,000 off that property. We're going to tax you on that full amount, and the tax rates are going to start at 32.5% and go up to 45% essentially, depending on how big the gain is. So you will, and the maximum tax rate in the US typically is 20%. And for an Australian tax resident, as I mentioned, it's 23.5%. So it is a very high capital gains tax to pay on property. On shares.
Yeah, and sorry, just to add that point, John, as well. I guess the sting in the tail could be if you're living in, say, California or New York and you're paying US state tax. On top of that, the effective tax rate could be up to sort of 60%, right? Plus with the exchange rate too, it could go either way as well. So yeah, really important to get advice regarding that structure, because you can structure around it too through potentially, trusts or having Australian residents own some of that property.
100%. Yeah, absolutely. Right. And that's where the state, as you were mentioning before, the state taxes, unfortunately, the double tax treaty is a federal agreement between the US federal government, the US Australian federal government. It's not an agreement between New York and California, who impose their own taxes. So, but then looking at shares, it doesn't matter where the shares are. If you're a non-resident for Australia, whether you own shares on the Australian Stock Exchange or, the US exchanges, Australia won't be assessing your capital gains whilst you're a non-resident for Australian capital gains tax, typically, unless you're having it treated as taxable Australian property. That's an election that you would make. But typically, you wouldn't be assessed on the capital gain. So very different tax treatments for different asset classes when you're a non-resident. US assets, when you're a non-resident, Australia is not assessing anything. So you can own a property in the US because Australia deploys a residency-based tax. Australia isn't looking anything globally. So similar for income taxes, just very, very quickly, rental income is taxed at that expat tax rate, 32.5 to 45%. And as a non-resident, for shares, dividends are taxed differently, where there's withholdings tax on certain shares. So basically fully franked shares like Commonwealth Bank, you don't get the franking credit but then you're not being taxed on the dividend. Unfranked dividends, you will pay up to 15% on the federal rate, and interest in bank accounts is 10% withholding tax. But there is, with the double tax treaty, there is protection from federal US taxes, from paying double taxes. If you're a resident, it's pretty simple. It's assessable income, and it goes on top of your other Australian earnings. Anything to add there, Brad, before we go on to the?
Yeah, that's a good summary, John.
Yep, beautiful.
Yep.
Did you want to maybe just you touched on it before, but did you want to go through a little bit about the property considerations, Brad? Yeah,
for sure. So I think, the first key point, as I touched on before, John, was just with Australian, your main residence, right? Just really avoid selling that while you're in the US, because you'll pay full Australian tax on that. So try and sell it while you're in Australia as an Australian tax resident. Ideally, you've got the option to rent it out for 6 years as well and retain the full exemption. So you do have the option to rent out your Australian home for up to 6 years, and then come back to Australia and sell it when you're back in Australia. Something to think about. But normally it's not a good outcome to sell it from the United States. I think you summed up the investment side well, John, on investment properties. I think at a high level, non-residents of Australia do get whacked pretty hard on investment properties in Australia. Not to say it can't be done and the taxes are sort of prohibitive, but it's really important just to structure around it. I think just to really understand what you're up for before you do it. I guess it's not so bad if you're living in America for a couple of years and you come back to Australia. That's certainly very manageable, but you're going to be a long-term US resident and just hold a property forever, that can be quite tax prohibitive. And also land tax is another factor as well to factor in, depending on the value of the property and what state you're in Australia. But as I mentioned before, the use of trust potentially in Australia could be an option, or secondly, having Australian residents own it, as tenants in common. So at least you're sort of sheltering some of that burden, and going, for example, 50-50 with your family back in Australia.
Yeah, excellent. Yep. And that's I think that's the key point, is that none of this is that you shouldn't do it or you can't do it. It's just having the information and contemplating it fully, because your circumstances do change when you go to the US. And if it is a year or two, and you're intending to own the property for 15 years, it's not going to probably move the needle too much. But the longer the stay in the US, the bigger these implications will have, as you pointed out there, Brad. And just following on, did you want to go through the deemed disposal?
So just quickly, there is what we call deemed disposal or exit charge when you cease to become an Australian tax resident. It does not apply to Australian property, so only to really shares or crypto or private investments that you own. Effectively, you've got two choices. You can elect to pay that exit tax when you leave Australia, or you can defer it. Now, the good news with America and Australia under the tax treaty, if you defer that exit tax, it means you just pay the capital gains tax in America going forward, which is actually normally a really good outcome as well. You do have the choice of paying the exit charge when you leave Australia. And normally you only do that if the gain was very small or a loss. If it's a loss, I would certainly think about doing it, especially given the last sort of 12 months with equity markets, share markets, because that loss can be used to carry forward against future gains in Australia. So just something to think about. It's never like a one size fits all answer, that one. It would depend on what assets you own, the value, the gain when you left Australia, your future plans. But certainly something to think about as well.
Yeah, beautiful.
Yep.
And just following on, did you want to continue on the US obligation? So briefly mentioned it before,
sure, John. Yeah, happy to. So a couple of points there would be, there is a double tax treaty between obviously the US and Australia. So at the federal level, it's normally, totally fine for employment income, because that treaty does offset federal taxes. And the US federal tax rates are normally a little lower than Australia, as a general comment. But I guess the one thing to really bear in mind where you can get burnt is the state taxes in the US that, do go up to sort of 11-12%, especially in states like California and New York. And the states don't give that tax credit. So really just think about, if you move into a high tax state, just plan around that and how it impacts on your Australian assets. I think the other point would be, just as a general comment, the US has a lot of reporting on your Australian asset. So, for example, your savings in your Australian bank account must go onto an FBAR, as with your, Australian super, and the fines for not complying with that with the IRS are really heavy. It's a $10,000 fine for not following that FBAR straight away. And then, as John mentioned, you've got the PFIC issue. If you've got Australian ETFs or mutual funds that must be reported in America as well. And as John was spoken about before, if you do become a citizen or a green card holder and move back to Australia, first, obviously, chat to Jantel on the immigration side and what that means to have a green card from Australia. But just bear in mind that that can create some issues on the American tax side. You still got to report all your US, income from all sources, employment, US assets, property on that Australian return. It's really a system of double tax credits after that to offset double tax. But of course, the timing regarding lodging returns in both countries is important. So they're the issues to think about with that.
Yeah, beautiful. And Brad touched on it there. One concept to really be mindful of is this concept of passive foreign investment company. What it means, this is the technical definition on the screen. It's a US tax term, and basically what it means is that if you've got a non-direct investment that's outside of the US, then you will face typically more punitive taxes on that investment from a US tax perspective. Now, what are we talking about in practical terms? So these are Australian exchange traded funds, Australian stapled securities. So if you don't know what a stapled security is, it's kind of part unit trust, part stock. So Transurban is a really good example. Most people wouldn't know and need to know. Transurban is a company in Australia and is actually a stapled security, so would typically fall into this bracket. Listed investment companies, so the property trusts, managed funds, so if you've got a colonial Australian managed fund or any other sort of pooled investment in Australia, or REITs or property trusts in Australia. And sorry, listed investment companies are things like Argo or Australian Investment Company, where it's a company going out and buying shares on the stock exchange on your behalf, essentially, within a sort of pooled investment. These are all examples of what the US would typically consider as a passive foreign investment company, and the extra reporting and the the extra tax that you pay. It's typically a much higher capital gains tax and income tax. Makes it quite punitive and typically pretty expensive. What are ways around this treatment? Direct stocks. And this is something that we do for a lot of US citizens with our analysts, is buying direct company stocks. So Commonwealth Bank, for example, or Telstra, not telling you to go out and buy those, but those are investments that would typically avoid this treatment. US domiciled exchange traded funds. There are a few of those available in Australia that are actually domiciled out of the US. You can buy them on the Australian exchange. Be a little bit careful there and make sure that you do speak with your US accountant before you look at that. Then you can invest. Alternatively, US doesn't have any problem with what you do in the US. You can buy whatever you want in the US market. US exchange traded funds, on the NASDAQ, anything that's US domiciled is usually not a problem. So it's anything foreign that there's a bit of a fear that you're trying to shelter tax ultimately. So those are ways to get around this treatment. Now, one important consideration, it's definitely easier to invest in the US, but an important consideration is, and just in your broader planning, is the currency exchange. So this is a really, really important area to navigate. Tax is super important. This is also important, and essentially the thing to be thinking about is where are you going to be? Where's your financial future? What currency is that financial future going to be domiciled in? So ultimately, if your longer term plans are 5 years time, I want to come back to Australia, I want to buy my primary residence, I want to send my kids to Australian private school, those future plans are going to be in Australian dollars. So you need to be thinking about your Australian dollar asset pool to be able to fund those future goals. So, if you look at the currency exchange here, it is very volatile. You're not going to be able to predict it. Don't try and time it or think that you're going to predict it, because there's so many different factors that influence currency exchange. And we use the example sort of around 2008 to 2015. So if you're an Aussie living in the US, earning US dollars, and you're building that asset pool in the US, and you're really building that asset pool to come back to Australia, retire in Australia, and buy an Australian property. If you wait and this trend happens again, where it's really a 7-year period where the Australian dollar was very, very strong for a few different reasons, the investments in the US may have done really well, but when you go to bring it back to Australia, you may not get the conversion that you really need to purchase the assets and live the life that you're wanting to live in Australia. So, not saying you need to move all your assets to Australia or anything like that, but this is just an example of why currency exchange is super important. Long-term trends, for $1 Australian dollar, it's around sort of 75 US cents as a long-term trend. We're about 68 cents at the moment. So unfortunately for those moving over to the US, it's not the best time historically to be sending assets to the US, but who knows, that could change pretty quickly. But the biggest thing I'd say is don't try and time these things. We find the best thing is if you can, if you've got a 2 or 3 year time horizon to come back to Australia, incrementally just send assets back. That way you're kind of just getting the average over a longer period of time, rather than trying to get the absolute optimal exchange rate. It's very, very difficult to do that. So just look at it from a risk management perspective, and it's going to depend on your circumstances and what you should be doing here, but it is an important consideration. Superannuation. So Brad mentioned it before. Self-managed super fund is complex on both sides. So Australia, if you become a non-resident for Australian taxes, central management and control of the self-managed super fund needs to be from Australia. There are ways that you can still do that by potentially having someone in Australia be the person that controls your self-managed fund, but it is difficult. And active members of the fund, at least 50% of the active members, the people contributing, need to be Australian residents. So it's very tricky for you to have a self-managed super fund when you're offshore and non-resident for Australia. It's not impossible, but it is very difficult. And the penalties, if you do fall foul of some of these rules, are horrendous. You do not want to end up in them from an ATO perspective. From the US side, and I'll mention in a second, the US for superannuation system is a very, very grey area. But the likelihood is that the US would look at the self-managed super fund and basically treat it as a foreign grantor trust, and basically look straight through the super fund and say, well, we're going to tax that in your personal return, and it opens up a whole range of issues on your the tax treatment of your self-managed super fund. Then flowing on to just general superannuation, if you've just got a normal super fund, again, it is a grey area for US taxes. Unfortunately, there's no IRS definition that they've come out with and said this is exactly how we're going to treat super. So I would encourage everyone to actually speak with your US accountant. You will see some differences between different firms in how they treat super. It's not their fault. It's just the IRS haven't given any clear guidance. So it's really open to interpretation in some respects. But as Brad mentioned, got to be a little bit careful about making voluntary contributions into your super. It can tip the scales where the IRS may then, start to look at your super as a foreign trust if you contribute too much into your super. The earnings within your super are either, and there's a few different reasons on what will trigger this, but it's either going to be taxable on the earnings each year within your super, or when you pull the money out. Unfortunately, superannuation is one of the best retirement vehicles in the world, but unfortunately, US tax unwinds this in that typically you would either pay tax on the earnings each year as you're accumulating, or on the way out on the investment earnings when you draw it down. And the other thing as well is probably not applicable for those going to move into the US, but if your employer is going to be contributing to your super and it's it comes off your Australian assessable income, the US typically doesn't recognize that. They'll usually look at your employer contributions as being part of your total remuneration package and taxable in the US. So just very quickly to wind this up, and just going back, how do you plan your finances for living in the US? There's no magic solution for everyone, one size fits all. As you probably gather, it is dependent on your circumstances. As we mentioned before, what assets do you build and where you build those assets. Look at what your financial goals, where they're going to be taking place, what the time horizon is. If you're living in the US for 10 to 15 years, it's probably stacks up a lot more to be building bigger pools of US assets than if you're staying there for a year, for example. So, consider the US and Australian taxes very different if you're a non-resident of Australia or a US taxpayer compared to if you're just an Australian resident. Currency exchange, as we talked about, and then as we talked about, both on the immigration side and making sure you get professionals that understand the immigration side. Make sure you do get professionals on the financial planning and tax side that understand both sides, because it is very different to just normal, tax and normal asset building and financial advice. So that is pretty much it, I think, in terms of our presentation. So I'm not sure if we've got any queries.
Quiet bunch. I just want to encourage anyone, because I have done previous webinars where no one asks any questions, at the end, and then you switch off and then you get this flooding of emails, and I'm always like, oh, you should have asked, because like if you're thinking something right now and you want to ask it, there's probably someone else thinking the same thing and isn't asking either. So you're helping someone else if you ask your question. Oh,
we got a question.
There we go.
Yep. So we've got a question coming through. It's
let us know who it's for.
Yep. That's that beautiful. And how are you seeing post-COVID, Chantal, the waiting times with because obviously there was a bit of pent-up demand coming through. But how are you seeing the wait times to get an E3 or a US visa at the moment?
Yeah, E3s are easy again now in Australia. Right now, appointments are available in August at the consulates in Australia. There's sooner availability closer to the US, but so people, if they need to get here before then, could get a consulate appointment somewhere closer to here. So it's good. Things have opened up again now.
Beautiful.
It looks like we do have a question.
Yeah, I'll jump in and answer the first one, and maybe John can answer the second one. So good question on having savings in Australia and how that is taxed. So effectively, keeping savings in an Australian bank account means that the interest component of that is taxed at 10% if you're a non-resident. So it's basically a 10% withholding tax on your Australian interest component from an Australian bank account. That would also go on your American return, but you get a credit in the US for the Australian tax paid, that 10% tax. Now, normally, if you tell your bank that you're residing overseas in America, the bank will actually pay that 10% tax on your behalf, which does, alleviate some compliance burden for you personally. So recommend normally to tell your bank you're living in America, and then the bank should actually pay that 10% tax on your behalf.
Yeah, beautiful. Thanks for that, Brad. And we've got another question on superannuation. So the question is whether the contributions to super, whether the US is going to look at taxing just Australian contributions, or is it only from assets from the US? Unfortunately, it's your worldwide contribution. So whether the money is from an Australian bank account going into super, or you're using your US money, because the US is going to look at your worldwide assets. They don't distinguish between money from the US or money from Australia. They're looking at everything. Effectively, it's any money, and you may be able to contribute, but you've just got to be very, very careful how much and when and what type of contributions. Which again, it's a grey area. I would definitely speak with your US accountant to see what their policy is on superannuation. And in terms of the earnings, basically they'll be looking at the annual earnings. So any earnings through the year that you're a US taxpayer. They're not going to go back if you move to the US, and they're not going to go back 3 years and look at the earnings that you earned 3 years ago. It's going to be looking at what you earned whilst you're in the US, typically on the earnings from accumulating. But when you pull the money out, if you're taxed on the money coming out, Brad, correct me if I'm wrong.
No, that's right, John.
Yeah, you would be assessed.
I think that's a really good point to you, mate, John, about finding the right US accountant to do it for you, because you can do it in a way where you can effectively claim a tax credit for what you contributed to super in Australia when you're working in Australia. If you were here and you've gone back to the US, for example, and that does help form a cost basis of that super without getting too complex from a technical point of view. It can result in some nice tax savings when you pull the super out. So I think just make sure you speak to the right person, and obviously would love to help with that, of course. Which sort of ties into Hayden's question there. And fully appreciate it is overwhelming and complex, and it is such a sort of specialized area. So yeah, of course, really happy to walk you through it, and as you said, sort of hold your hand through that process. Yeah, me and John would love to have a chat with you for sure. So yeah, please get in touch. Yeah,
and feel free to reach out to either one of us. Maybe we're always very honest in terms of whether we're the right fit. So if you come through to me, I'll see the sort of needs that you're looking for. And it may be Brad that you need, because it can be difficult to know, do you need a financial advisor? Do you need someone like Brad? Do you need both? Always too happy to just have a bit of a chat and see, who the right professional is, and steer you in the right direction.
John and Brad, I have a question actually, just in consideration of people that are moving to the US or already live in the US, with respect, on that income, the property, the capital gains tax on property, if you are now a US tax resident, right? So what if someone comes over, they become a US tax resident, but then they inherit property from a parent or grandparent that then dies, and is there a way that, should people be thinking about that? Should the person who's writing their will structure it so that it goes to a trust or to a different relative? You had mentioned a different relative owning it. Yep. Is it a problem if it goes directly to that person, or do they have time to redirect it, I guess, to another family member, or put it in a trust, or are kind of screwed at the moment that they inherit property?
That's a really fantastic question, and we get it a lot, and it's obviously quite a common issue for sure. So it's a complex question, right? And again, there's never probably one size fits all. It would depend really if it was an Australian main residence or an investment property back in Australia. So if it's a main residence in Australia of the person that unfortunately passed away, that's relatively, I guess, good news on the tax side, in the ATO say you've got 2 years, you can sell that property tax-free, even if you're living in America, tax-free from Australian taxes. And from a US perspective, you'd get basically the fair market value on passing would be the cost basis in the US. So that would just restrict any US tax to any value that accrues after passing. So that outcome is normally good. I guess the thing to bear in mind would be, if you decide to keep the property and do not sell it in that 2-year period, that's when the taxes in Australia especially can be high, because you're effectively denied the exemption from capital gains tax after that 2-year period. So really good question. If it's investment property, the answer is a bit different, in that it would still remain subject to Australian tax on the original purchase price, and the taxes can be pretty high, to be frank, on an investment property in both countries.
And so it would be subject to both Australian tax because you're a non-resident, and US tax because you're a US tax resident.
That's right. Yeah, exactly. But the US would give you a tax credit for what you paid in Australia, because it's Australian property. Australia would tax it first, and you'll get a credit in America for the Australian taxes paid. Yeah.
If it's primary residence, like you said, the person who, let's just say it's, you come over, Brad, and it's your parent, and you've been living in America now, for 2 years, and your parent passes away, and they, in their will, it wasn't their investment property, but they left you their primary home. Mm-hmm. You're saying you could sell it within 2 years and not be taxed in Australia, but what about in the US?
Yeah, that's exactly right. So no tax in Australia. In the US, you basically, your capital gains cost basis is the value at the time the person passed away. So that was one of my parents when they passed away. So you're only paying tax on any increase in the value of the property after the date of passing. So that's, you know, relatively good news in America as well. So you're quarantining the capital gain to any growth after the value from the passing date onwards. Yeah.
Right.
Yeah. But it does become an issue if you do hold the property past that 2-year period. And that's when, you know, Australia would tax you on the value that's accrued after passing. So yeah, it's a really common question. And estate planning is also a part of that, how it fits into, you know, obviously the estate plan. Obviously Australia doesn't have any death taxes, which is nice. You know, America does, of course. So just be aware if you're over those thresholds in America, it also would come into the estate tax in the US as well, which is, yeah, probably a question for another day.
Yeah.
So for the listeners, if they did want to do estate planning, right, they're moving to the US and they want to do estate planning that covers both US issues and Australian issues, who is it that they would go to out of the two of you?
Good. Well, it's a good, really good question. And you know, typically, in terms of getting the formal documents, that have been an estate planning lawyer, and it depends on where the assets are situated, and what assets they are. You know, but in an example where you've got a property in each location, most lawyers would say you probably need a will in both locations. You know, having one that handles the Australian assets that are going to form part of your Australian estate, and another will in the US that forms your US estate, and having them speak to each other, because they can sort of cancel each other out if they're not you know, done in sort of cohesion. Having in terms of the broader planning, you know, tax planning, and that side of things, Brad, you know, is certainly someone that will be able to look at certain structures in certain cases, as well. So
yeah, it's a really good question. Yeah, that's exactly right, John. I agree with that. And I think it's obviously, you know, tax forms part of the estate planning as well. So they very much go hand in hand. So you want to work with someone that does both and talk to each other. There's a couple of really good firms that do specialize in estate planning out there, which we work with carefully, that do cross-border US and Australian estate planning. So yeah, as John mentioned, as a minimum, you want wills in both countries covering the Australian assets and the American assets as a minimum. But obviously, if the estate's larger than that, it certainly would warrant some advice for sure.
And just on those partners, there is a question there about sorry, did you have another question on these?
No, I was just going to bring up that there was another question there.
Yes.
I wanted to get to for you guys. That's kind of looks like it's for me, but it's actually for you guys.
About there's one about accounting, and whether we have ties with a good US accountant. Absolutely. So definitely reach out. Brad's got a good partner that he works with on the US tax side of things, and we all kind of work in cohesion on the financial planning, Australian tax and US tax. So please feel free to reach out if you need a solution in the US, and one that understands Australian assets, and the cross-border considerations in you know, in managing your finances across Australia and the US.
Yeah, in terms of that question too, going from the ETSA to the E3, like good question. So yeah, from a tax point of view, if you went to the US on a ETSA tourist visa, you'd certainly remain an Australian tax resident for that period of time, and that just means effectively you would declare your income on your Australian return, claim a tax credit if you're paying taxes in America. But once you do transition to that E3, that's when normally you become non-resident of Australia from that point. So that's normally the sort of trigger point from a tax residency point of view in Australia.
And there's another question on tax residency there, Brad, which will be one for you, which is just saying, if you become a non-resident for Australian tax, can you undo that? And would there be a benefit to jumping back and forth? And there's a follow-up to that. So but sorry, you go.
Oh, sorry. Yeah. Like, it's a good question. Like, normally you can't jump back and forth in a relatively short period of time. You know, that ATO doesn't normally like that. So it's normally like it's a question of fact, like are you a resident or not? You know, if you did your return, you know, say incorrectly or your accountant did, you can go back and amend that and change that. And of course, happy to help out with that. In terms of is there an advantage doing so, it would really depend on the situation. So maybe please email me. Perhaps we can organize a phone call just to go through it in a bit more detail. You've got an option normally within 4 years to go back and amend your Australian return.
And there was a follow-up to that saying, can you do it whilst living in the US? Probably pretty difficult to do that, I'd imagine, Brad. You know, you're living in the US and triggering Australian tax residency again.
I mean, if it I guess normally we're seeing that at the moment in the context of trying to sell your Australian home. And sorry, I didn't read the full question, but that's, you know, what a lot of people are looking to do at the moment. And that's probably quite difficult to sort of live in America and say an Australian tax resident for that reason. You need to normally, you know, come back to Australia to do that, to sell your Aussie home and get that benefit.
Cool.
Question for Chantel, I get this question quite a lot actually, is if you come to Australia and you have a green card, how long can you actually legally reside in Australia for and retain the green card? You may have covered it in your presentation, but
I didn't actually. That's a great question. So so if once you have a green card, you need to preserve it. If you leave the US for more than a year in one go, so you don't come back for any trips in that time, you could be deemed to have abandoned that green card. However, during COVID, this happened a lot, right? There were people that were stuck outside the US for more than a year. But we were able to, as long as you can show you didn't intentionally you weren't really trying to abandon it, you typically can come back in on the green card. But what it will do, if you've been gone more than 6 months at one time on your green card, your clock towards being able to qualify for citizenship gets broken. So when I was saying you had to be here for 3 years to qualify for citizenship if you're married to a US citizen, or 5 years if you've got a green card another way, there are other requirements in that you have to have been physically present 1.5 years or 2.5 years, half of that 3 or 5 year amount of time, and had a continuous residence, meaning no trips more than 6 months at one time. So while you won't fully lose your green card, you have to restart your 5 year clock or your 3 year clock towards citizenship if you've been out of the US for more than 6 months in one go. And certainly if you've been out of the US more than a year in one go, then you're absolutely starting that new 5 year clock to be able to qualify for.
Interesting. It's obviously really important to get in touch and discuss that if you're going to move to Australia and what that would mean.
On that same topic, if you know you're going to be going to Australia for more than 6 months or a year, and you've got a green card and you want to preserve it, there is a document you can file to preserve your green card, and it allows you to be out of the US for up to 2 years in one go, and then come back after 2 years, and you show this. It's called a re-entry permit. You show that permit, and that is an act. That's a willful act that you made to say, I know I'm going to be abroad for a long time, but I am intentionally going to try and keep my green card. So, you know, I've taken this act. So they can't then at the airport say, we think you've abandoned your green card and try and take it away from you because you've got this document. So if you do know you're going to live for a specific amount of time and want to retain your green card, it's good to get in touch with an immigration lawyer to file for that document to protect the green card.
It's good to know. It's a really important point.
Excellent. Well, we got some questions in the end, which is good. So it's worth hanging around for a little bit longer. And but I think we're good to wind this up, coming up to the hour and a half mark. Some great content there. Thanks so much, Chantel, for joining and staying up late in New York City. Fantastic to have you. And also, Brad, thank you very much. Some really good insights there on moving across to the US from Australia, and making sure you don't run into any pitfalls. But thank you to everyone joining as well. Hope you got some good insights there as well. And enjoy the rest of your evenings or days wherever you're tuning in from. And please feel free to reach out to us if we can help further.
Thank you, gentlemen.
Thank you.
Thanks, everyone.
Take care, everyone. Bye.
Bye.